This conference will now be recorded.
All right, so today we are talking about repayment agreements. We're going to kind of talk through like a really high level, like the concepts involved. Then we're going to look and see what's happening on the ledger and walk through an example. And then if there's any time left, we'll see if there are any questions. There will be a quiz at the end with the most random collection of prizes I think I've ever seen. So stay tuned for that. All right. So first off, when talking about repayment agreements, it has a really specific meaning. We tend to throw that term around as though it's any time the resident owes for anything. That's not actually the case. When we're talking about repayment agreements, we're talking about situations where a resident fails to report a required change, usually an increase in income, and that results in an overpaid amount of subsidy that has to then be returned to HUD. So a repayment agreement is not for any charges other than rent and HAP. If you're looking at the ledger and you see a charge code that's not either of those two things, a repayment agreement is not the answer. And it's also not the case when a resident underpaid rent previously. So if we charge $250 and the resident only paid $200, that's not a repayment agreement either. In that case, we accepted a partial payment. And the resident just owes that $50, but it's not anything we can do through a repayment agreement. Repayment agreements also involve retroactive certifications. Retroactive certifications being anything that goes back to a time period that was already posted. So when you have a retroactive cert that's caused by failure to report, and that's the key part, right? It's the resident's failure to report either a new income source or an increase that they were required to report. Then what happens on the ledger is the old rent charged for that period is kind of backed out. We see that like in the negative charges, we see that on the ledger, and the new charges are created for tenant rent. The net of those two things resulting in an increase. The same thing, by the way, happens on the HAP side. We just typically don't look at it. Christian may be the only one in our department who routinely looks at HAP ledgers because he's interested in what HUD is paying, what they paid before, and what they'll pay now. So here's kind of the concept. And throughout this discussion, we're ignoring zero HAP certs. That tends to complicate things. But in general, the resident pays 30% of their adjusted income towards rent. So that's their TTP. You subtract the UA, and then that's the actual rent that the tenant pays. Then whatever that amount is, HUD makes up the difference between that amount and the contract rent, and that's subsidy or HAP. So in our chart to the right, we see this unit has a contract rent of $1,000, right? For each of these months, the amounts go up to $1,000. The resident portion is $150, and HUD is paying $850. Make sense? So when you have a retroactive adjustment, and again, I'm going to say this like 30 times in the next hour, caused by the household's failure to report a required change. If that results in a rent increase, it really does kind of leave this hole in the amount of subsidy that's owed, or the amount of rent that we can collect. So here in this example, we have a 4122 IR, which increased rent and decreased subsidy by $200 per month, resulting in $800 that we just don't have, right? And there's a difference. This is kind of fundamental, but it helps, I think. There's a difference between the amount we charge and the amount we collect. That makes perfect sense on the surface, right? But what's happening is we're charging these amounts, we're collecting these amounts, and then several months later, we're then adjusting what we should have collected. The thing about it is HUD is really quick to take back their money. They'll do it within 30 days. Once that cert is signed, the next time Christian runs a voucher, HUD's going to take their money back. Residents are not as quick as the federal government, surprisingly, to come up with $800 or $1,200 or $3,000. HUD, though, they're always going to take their money. They're always going to do it in the next month. I just said that. So HUD's point of view is, oh, you only needed $650 for those months instead of $850. Cool, I'll have it. I'll take back my $800, and then you and I are good. I'm out. So that same 800 the resident owes, and that's the issue, right? If you pull up the TAR out of Yardi, it'll show they owe that $800. If they can't pay it immediately, then that's when a repayment agreement becomes involved. Everybody good so far? Few nods. So again, HUD gets their money really quick. When we can't get it immediately from the resident, then that's where repayment comes in. So the certifications created those adjustments, right? That pulled us down 800. How the repayment agreement works is HUD just gives us the 800, right? So the resident owes 800. HUD's going to get involved and say, hey, Haka, this isn't your fault. It's the resident's fault. You're telling me that because there's a repayment agreement. So I'm going to give you $800. Now, every month, the household owes you money. You collect that money and you give it back to me. So we're kind of like the collection agent is what this really comes down to. Really, the resident owes us money, but HUD says it's not your fault. Here's your money. Now, as the resident gives you money back, you give it to me, and then you're good. We're going to see that hopefully a little more clearly and straightforward on the ledger as we go through our example. So a couple rules before we move on any further. One, repayment agreements are always calculated in terms of HAP amount. Again, we tend to think in terms of tenant ledger and unpaid charges non-HAP. When it comes to calculating repayment agreements, though, it's always in terms of HAP. And where this is really important is when it comes to zero HAP certs. Repayment agreements, again, are only in terms of what HUD is ultimately owed because they're the one giving us the money. And if it's zero HAP, anything above contract rent is our money. That needs to go through an installment agreement. So let's start looking at our example. And I think I've blurred out everyone to not make it obvious who this guy is, but just in case I did miss something, this is completely a test scenario. I created this scenario. I wanted to find one where the ledger was really clean and easy so we can see what's going on. So Mark moved in on February 2nd, 2022, and we see his tenant rent there is $248. When you look at his ledger, it's perfect. If they all looked like this, that would be wonderful. We can see as of July 1st, his balance is negative $2, and that comes from him overpaying. He paid $250 and only $248 was due. He paid his security deposit in 2 installments, and so he has this $2 credit. Every month he pays his rent on time, and so this is a really clean ledger. Right about now actually is time to pull his EIV income report within 90 days of sending his move-in in. And something doesn't feel right. So we start looking at that move-in report. We realize he has income from a home health company that he didn't report from the month prior or the quarter prior to his move-in. We ask him about it. He says, yeah, sometimes I work there. We print the work number report, and he works there 20 hours a week, every week. And we need to create a move-in correction. This goes back to prior to move-in. So we have a 222. Oh, sorry, that's a typo. It should say 22 move-in 1. So a move-in correction. We'll need that in Yardi and Laserfish. We know we're going to need a repayment agreement. We're going to issue him a lease violation in conjunction with that repayment agreement. And we're going to collect the additional security deposit amount that's due. And that's because we do need a move-in correction. There was a change to the TTP, and so he owes that increase. So here we have our move-in 1 in Yardi. We see his tenant rent was $248. Now it's going to be $638, going all the way back to February 2nd, his move-in date. Because this property doesn't have a UA, I keep saying tenant rent. Tenant rent and TTP are the same thing. Because there's no UA. For you, family property is going to be different. But this is the amount of rent he owes. More importantly, for our repayment agreement conversation, this is the HAP, right? It's going from $585, that's originally what HUD was paying, to $195. Here's my plug. This is the point where we want to start calculating the repayment agreement before we get the cert signed, so that we can look and see and prepare this agreement so the household can sign their certs, the repayment agreement, and the probationary agreement all at the same time. It's a little bit more difficult. It is. We can help you, LH service request, but it's much easier to knock this out all at once. It's easier on the resident. It's easier for your mental health, I promise. It's easier on Christian, who doesn't have to email you about this. It's easier on John, who doesn't have to audit this open agreement. It's easier on everyone if this is all knocked out before the certs are signed. Do we have a question? I think somebody just unmuted maybe. But y'all, yeah, should have said from the start. Unmute, ask questions if you have any, if any pop up. So once we put the owner sign dates in for the move-in one, we now have the option to quick post, and this is going to tell us exactly what will happen once the cert is posted. So we can see we've got our tenant and owner sign dates in. We click save. And then from the certification screen, if you go to functions and 5.9 quick post preview, it'll show you all the charges that will come once this certification is posted. And here it is. So let's kind of start at the top. For one, we got this new deposit. So it was an increase, a $390 increase in TTP. That's also translates to an increase in the security deposit. So it's going to create a $390 additional security deposit charge. Then, and HUD adjustments always work this way. It's going to take back everything it charged before and replace it with what it needs to charge that's new. So it's taking back the total charges from February 2nd through the end of July. That's $1,479. It's taking back the August charge, which is $248. And then it's replacing it February through July with $3,805. And for August 8/1 to 8/31, it's replacing it with $638. This is all the rent column. The opposite is happening on the HAP. They're taking back the original charges from February to July, taking back the August charge, and they're replacing them with the higher charges. And we can see here it's kind of a net zero sum. This is what we're talking about in those first graphs. There's $2,716 in additional adjustment rent charges. There's $2,716 less in HAP. So one goes down, the other goes up. Once this is posted, this is what we'll see on the ledger. And I didn't put a box around it, but here's our $390 for the security deposit, additional charge. That's in addition to what was originally charged, the $248. The resident owes that. Again, though, it's not a rent and HAP code, so it's not something that would be involved in a repayment agreement. Then we have that negative charge to kind of return what was originally charged from February to July. And we have the replacement charge, February to July, of the new higher amount. Same thing kind of happens with just August. It's the original charge, taking it back, and then replacing it with the higher amount. And then because we posted, it's going to charge new rent for September, already out into September. You can see what was once beautiful, his $2 credit, is now turned into, as of July 12, $2,714 that's owed. Let's pause here. Any questions? You want to talk through this again? This is a super important concept in seeing what's happening on the ledgers. How's everybody feeling? A couple of thumbs up. Oh, go ahead.
I'll just throw out there, Brian, that they won't see this on the ledger as they're preparing, right? That this only shows up on the ledger once everything's kind of been signed.
Yes, this is owner sign date in the certs, and this is posted as well. All right, so at this point, if you didn't do...
I'm sorry, Brian,
Yes,
let me go back. So
Yeah.
I understand that Nancy said it's not going to show up until it's posted, but are these the same figures that we saw in the quick post preview?
They would.
Okay.
If you look at this rent, the total adjustment is 2,716. If you look at 712, this is their balance is showing is 2,714. It's $2 less because of that $2 credit. It translates to the dollar. Yeah, it's telling you what it is going to do, and then it does it.
So Brian,
Yes,
that's
ma'am.
the screen prior to the quick post, is that before the fact or after the fact?
This,
That next screen, I mean, go back one more. Where you had the, yeah, then one more, I'm sorry. Well, where you had the ledger where it had the adjustments from, so yeah, is this ledger before the fact of quick post or after the fact?
this is after the fact.
So that next screen is what you did to create this screen, that quick post screen.
So this is the quick post preview. This is accessible to you all. You can always find it. You can always see what Yardi will do.
Okay, yes.
To actually quick post, that's an LI service request, and Nancy, Christian, or myself will actually post.
Okay. And
If
Nancy,
you need something posted, we're happy to do it, and it's a really quick process.
Nancy, is that what you did earlier to my file when you posted the cert, and then I went back and I saw those adjustments? That's what that did. Okay.
Correct.
Okay, great. Thank you.
This really is what it'll look like before the signature dates. You see this is in edit mode, and we could absolutely calculate, and ideally we would absolutely calculate the repayment agreement based off of nothing more than this. This is a really simple example, and we'll get to our calculation sheet here in a second. But really all we're doing is looking at 585, the difference in half between 585 and 195 for X number of months. So let's hop back here. Now, so if this was posted, everything's showing on the adjustment, and you didn't do anything with it, you would get an email that looks like this from Christian. And with regard to this email, I just want to say all he's doing is he's looking at the amounts on the voucher, and he's saying, we're asking HUD for $2,385 less than what we previously asked for. What's going on? And that's all Christian knows. That's all he's aware of. He's not going through Laserfish. He's not going through and looking at certs and the reason for certs. He does need an answer though. So he needs to know, why is there this giant adjustment? Is there a write-off in process that I'm not seeing? Is there a repayment agreement? And if it gets to this point, it's well past the point where, you know, we could have calculated the repayment agreement balance and started to get it signed. So that's just where these emails are coming from. All he knows is we're asking HUD for a lot less money for this household. What's going on? And that's his question.
Can I just throw out there that I'm going to tie that back to what Brian said, is if we're giving back HUD, like in this scenario on one of them, $3,800, if it's coming off one side, it's being added to another. That means we just gave HUD back $3,800. That means we just added $3,800 with what he's doing, right? Because he's prepping and posting. He just put $3,800 on a ledger. And we all know what happens when large amounts go on ledgers and sit there and don't get looked at. Because like, you don't know that sometimes that post put $3,800 on a ledger. And we don't want to go 2 and 3 months and then figure out, wait a minute, is that a repayment agreement? Or is that a ledger adjustment, and the longer it goes, the more confusing it gets. Just wanted you to know, like, the intent behind that is to help keep up with some of those TARs that can get really complicated.
So let's start looking at our calculation sheet. And remember, we're talking about things in terms of half. Here's our resident screen again. And again, I fully recognize this is an easy example, but that's on purpose so we can all see kind of what's happening on both sides. The original move-in had a HAP of 585, and now it's dropped to 195.
Marguerite,
so I'm gonna put yes, ma'am.
Okay, so when you post the repayment agreement and you look at the layer, you're able to see that it was posted in the amount that the resident owned. So Christian looked at that before he sent those emails, so how did he question us with that?
Yes, he's absolutely looking to see if there is a repayment agreement adjustment on the ledger, which on his side means a repayment agreement that he's posting to HUD. He's definitely looking at that ahead of time. So
we do, and then another question I have is, when we post it, are we able to charge more than $20 in each of the one line or no?
Yes, we're gonna get there, but yes, you absolutely can.
Okay, how much we can charge? What is the max?
Well, let's get there, and if I don't answer your question, let me know.
Okay, yeah, that's the only two I have.
Hey, B, can I add something to the Kristen scenario?
Yes.
I would recommend, it's not a requirement in our Yardi memos, that from what I can tell, but I know that it has been very helpful for Kristen when I was on property. If you put in Yardi memos, the repayment agreement, what it's for, when it started, all the amounts and stuff, he goes and looks in Yardi memos as well. And that'll sometimes give him the answers he needs, and he won't have to send you those emails. So I just recommend you guys putting that in your Yardi memos, just in case you happen to be out of the office and someone's covering, and that information is already there, and they don't have to start trying to figure out what's going on with that. So that's just my 2 cents from what I've experienced in the past couple of months while I was at Santa Rita.
So this next screen is going to be our calculation sheet. Just want everybody to notice, remember, this is a February 2nd move-in, so one of these calculations is a little bit funky, and I'll kind of talk through it here in a second. February 2nd move-in, so it's not an entire month. Our HAP, though, again, did go from 585 to 195. So for most of this period, that's what I'm putting. The previous paid HAP was 585. The corrected HAP was 195. Because this household moved in on February 2nd, it's not the full month. And so there's a little calculation you need to do. 585 was the HAP amount. There's 28 days in February. So I'm going to do 585 divided by 28, which gives us $20.89, which is the subsidy per day. Then I take that $20.89 and multiply it by 27, which is the number of days they were subsidized. So February 2nd through February 28th, that's 27 days, and that gives us 564. That's the amount that went in for February. Same calculation was done for the corrected HAP. I took the HAP amount, divided by the number of days in the month, then multiplied that by the number of days they were subsidized to get the total there. And this calculation sheet's going to do then all the math for you. The amount to be returned to HUD is this column, and it sums it all up, and so 2,326 is the total here. On this right side, it highlights which fields you need to fill out, and so those are the adjusted gross income. You can get that from the 5.9. It's also in a couple places in Yardi, but it's in them. On page 2 of the 5.9, the big page with all the info, it's at the very bottom in the middle. The total HACA owed subsidy is $0. None of these certs were 0 HAP. And then it's all going to point to this minimum payment. So the rule here is that the household doesn't have to pay any more than 10% of their adjusted gross income. And that's why it's asking you up here for their adjusted gross income. So it can then calculate this to 212. We won't take any less than 212. We will happily take more than 212 per month. So these amounts are ultimately going to go into Yardi. Does everybody see kind of what went in and why the total was 2,326? The other thing I point out here is August. Today is July 14th. I would feel I wouldn't feel right about including the August amount in this repayment agreement. Remember kind of the impetus of this, right? That the resident misreported, so they are no longer we are no longer required to give them a 30-day notice of rent increase. So rather than including August in this repayment agreement, even though it's an adjustment, I'm saying the resident owes that higher rent amount for August, in addition to this repayment agreement that we're going to have them sign. If I was giving this presentation on July 29th, maybe I give you a different answer. If we hadn't gotten out the notice of rent change until today, maybe that's a little different. Maybe I do include August, but I think, open an LIH service request if you have a question. Talk to your ZD. I think it's really just a matter of timing. Was there a question that just came in? We don't enter the amount in the total HACA owed subsidy if they still have HAP. So what it's asking for in this total HACA owed subsidy is if there is a zero HAP certification, then there's a second tab on this spreadsheet, in which case you'd enter in their tenant rent and the contract rent, and that would tell you, again, like keep this separate in your mind, but that tells you how much of rent they underpaid that is due to us. It's not a part of the repayment agreement because subsidy isn't involved, it's separate. But no, so it's not included in the repayment agreement calculation. Those concepts are a bit tricky. No one else in the industry has to deal with this. This is a uniquely rad problem. And so it is tricky. But essentially, if all your certs involve, if none of them are zero HAP, then no, we don't have to worry about the total HACA owed subsidy, which is definitely a separate issue from, say, a security deposit refund or a security deposit installment agreement that wasn't paid, or partial payments that were accepted. That's not what we're talking about at all. This is only zero HAP where the tenant rent is greater than the contract rent. Yeah, so if they went zero HAP, everything over the contract rent amount, every amount they owe above contract rent, they owe us. It wouldn't be included in the repayment agreement. At this point, this is where we would consult this chart to tell us what's next. In this case, our repayment agreement total is $2,326. This was their first offense, and so it's $5,000 or less. So here's what we're going with: 12-month probation and repayment agreement to reimburse HUD. So once you know your amount, that's when you're going to start looking at this chart. All right, so here is our repayment agreement screen. I would get here from monthly procedures at the top of Yardi from the affordable role, then go to review repayment agreement. And I've kind of entered everything here so we can look at it and talk about it. So this is a tenant agreement. It's always tenant. Don't use another of the drop down, always tenant. The active certification is going to be their most recent cert, and that is their move-in 1. The agreement date is the date that they sign it. The first payment due is August 1st. Now, when you're first entering this into Yardi, you should do this well aware of the resident coming in. these dates you're not going to necessarily know. You can have an appointment scheduled. That's great. Put that date in there. These are somewhat, fluid until the resident comes in to sign it. Then we'll update it to be accurate. And speaking specifically about the agreement date, first payment due. The agreement amount, 2,326. That's coming from the calculation sheet. And then the monthly payment amount, 212. Also from the calculation sheet. Funny enough, Yardi says it should be 213. I disagree. I think their math is bad. I round down because HUD says it should not exceed 10%. So I don't know. I'm not changing my calculation sheet. I think they're wrong. I can hear Veronica snickering at me from the next cube over. Margarita, here's your question. And this is a key thing I don't think we do enough of. These are expenses. And here's what we're talking about. Any work that we do in completing this agreement, we can essentially charge for. And that's what this comes down to. So reviewing income discrepancies, preparing certs, meeting with the residents, all of these things we can log as expenses, and we get to retain that portion of the repayment agreement. So how we calculate this is based on $20 an hour, which is somewhat of a fair average between kind of all of our salaries. If we add them all up, average them, $20 an hour is how we should calculate it. So Margarita, yes, if you spend 2 hours working on something, you can put $40 in. If you spend 15 minutes, you can put $5 in. The only limit, and to be honest, I'm not sure what Yardi would do. The only limit is, shoot, Nancy, is it 20% or 10? I want to say 20%. She's looking it up. I want to say it's 20% of the total. That would be our upper limit. We want to be honest and responsible and only claim the expenses that are valid. So, I mean, you can't say you spent $100 or 100 hours, and so you should get the entire balance. It doesn't work that way. Be honest with how much you actually spent on the repayment agreement, on the certs, on verifying it, on looking all of it up. Be honest, but I mean, also use this. And this is kind of a key point. Each of your units, each of your properties has a maximum amount of income that you can collect. That somewhat fluctuates with zero HAP, right? Theoretically, somebody could add billions to your property, but I don't think that's going to happen. The only thing you have control over really is repayment agreement expenses, which can add money on top of your contract rent potential. So once you've got this all in here and you click save, up here at the top of the agreement, under the reports menu, you have this agreement option, which actually prints the agreement out for you. It's only as good as the data that you entered here. So it's going to carry over these dates, like agreement date, the amount due, the monthly payment. So make sure all of this data is good, save it, and then you can print your agreements here. We have an agreement here. Let's go through they're all important, but I highlighted some things to make sure. Let's all just spend the time to read through this. So this July 12th is coming from that agreement date we just saw on that screen. Again, one of the key parts to repayment agreements in general is this is because the resident failed to accurately disclose eligibility. And they're admitting this, they're signing this. This is a key paragraph. Excuse me. We understand the failure to disclose any income as described by the lease is a material lease violation in accordance with HUD Model Lease Paragraph 4 regarding changes in the household share of the rent, and or Paragraph 16 regarding the resident's obligation to report changes between regularly scheduled certifications. And this really is what makes a repayment agreement a repayment agreement. If they did report something and we failed to act on it, not a repayment agreement. That's a ledger adjustment. This last part that I highlighted, we understand that even if we move to another residence, we're still required to pay HUD any assistance received in error. This requirement is included in our current lease. Please see the monolease paragraph 18 regarding the resident's obligation to repay. I highlight this just to say that stay tuned. Nancy has been working long and hard with various HACA departments to get this sorted out. So even if someone is moving to with a housing choice voucher, if they owe you $10,000, we're going to collect on it, or we're going to stop issuing their voucher. Downstairs is going to stop issuing their voucher. So hopefully we can get this sorted out.
Hey, Brian.
Hey.
Can you-
Yes.
That's what I was going to ask. How do you all monitor the people that have moved out and have moved out with owing all this money and they don't pay a cent? Are we just losing all that money until you all get where we need to be, or do you know if we've gotten any money back from people that move out?
So we have gotten some money back. Go ahead, Nancy.
I was gonna say we've gotten a little, but it's not much. And I'll tell you that I've gotten the attention of Barbara Chen because I dropped, we started issuing a lot of choice mobility vouchers last year. And I started seeing lots of balances go through. So I went back and did a little data mining and dumped it all in a Google sheet. And I showed her the numbers. Always helps to get the money person on your side, right? And so we've gotten the housing choice voucher, Section 8, to issue at least one balance due notice. And I now have gotten Barbara and Lisa on board to come up with a second notice that gives them a deadline to enter an installment agreement and make payments, or they're going to lose their voucher. And I have Natalia now going in and updating any payments that were made. So I'd say I'm about halfway through where I want to be on getting it done, but I've got, I think, all the right people finally in agreement that they will start saying, we're going to cut off your voucher assistance if you don't make payments. So I have, we're getting there, but more to come.
That's good to hear.
I just noticed Nancy did drop in the chat our answer to the earlier question. So it's to Margarita's question, it's the lesser of actual cost, or 20%. So 20% would be the cap, the most we could collect in expenses. But again, as always, be honest. Yeah, honest and fair with the expenses that you are entering. And that goes both ways. Don't forget to enter them, and don't go crazy overboard either.
Hey, Brian.
Hey.
I think, just for Issa's question, I think she was kind of asking about how it affects the operating budget too, right? And I just wanted to point out the unpaid repayment agreements, we're not losing money on that. HUD's losing money on that. We're losing, the big chunk of money that we're losing is on the unpaid installment agreements. So I just wanted to clarify real quick.
Yeah, that's a good point.
Thank you.
A little bit further down the repayment agreement, we got our balance listed. And the key part, again, another key part of the repayment agreement, they're unable to pay the debt in a lump sum. So they can't afford to pay it all off right now. That's why we're entering into this agreement to pay it over several months. Just a couple things I noticed and carefully reading through. This sentence is broken. We need to fix this token with Yardi. It should say, we shall have blank number of months. So it should actually have the number here. I'll get that fixed. And then here, this last sentence, further, this agreement is made knowingly, voluntarily, and intelligently, and not under any degree of duress or compulsion whatsoever. It's a key thing to add. The flip side of that is, you do not have to sign a repayment agreement. If you do not, then you owe $2,376, whatever the amount is. And I'll just say too, and this is on us, it was kind of a self-revelation to me in reading this sentence. A lot of times the message you're getting from us is, you got to get this signed, you got to get this signed. If they're unwilling to sign it though, just let us know. If they're not wanting to sign it, you know, again, to that point of that last sentence, they don't have to, but there are consequences to not signing it. So according to the agreement, to this agreement, we agree to pay. Here's another error in this form. I'll get this fixed as well. It should have the amount that they're agreeing to pay effective today. But then the remaining will be paid in installments of $212. Both of these things coming from that repayment agreement screen, pulling in from there. And this amount is due on the 1st, and it's beginning August 1st. Those three things all pulled in from the repayment agreement. This is in addition to the rent and this key part, which I don't think we do nearly enough of both ways, that if their entire household's income increases or decreases by 200 or more per month, we can renegotiate this amount. And we'll see how to do that in just a minute. By signing this agreement, we certify that we have disclosed any and all income received during my tenancy at the property. This is another key point. How many times have we done repayment agreement followed by another repayment followed by another repayment? This is a key thing to highlight. They're saying they've come clean. This is it. This is all their income. They've reported everything. If that's not the case, there should be consequences. And if we're putting on probation and issuing the correct notices, then we should take it to court. As is noted in this last paragraph here, we understand that if we do not meet my scheduled payment, it is ground for immediate eviction. So once all the certs are signed, once the agreement is signed and in Laserfish, you'll enter the signature dates for the certs in Yardi, if you haven't already. Confirm everything on this agreement, and then very last thing is to click post. That's going to change the status from unposted to active. And that really, this is kind of the engine that drives a lot of this. And it makes a lot of people happy. John, Christian, the ledger, our bank account, everyone. Posting this agreement should work towards fixing the ledger, should work towards making things a lot clearer to a lot of people. After you post, there's going to be a few different reports you have options to see from that repayment agreement screen. But let's look at the non-HAP ledger from the tenant screen and what happened there. So here is our original adjustment, right? We took back $1,479 and we replaced it with a rent charge of $3,805. That's a difference of $2,326, which is the exact amount of the repayment agreement reversal here. The balance of $388, all that's left after this adjustment came through for the repayment agreement, is the $388, and that's the $390, the original, well, not the original, the new security deposit increase charge of $390 minus the $2 credit they originally have. So that's the only balance left on this ledger as of July. $388, which is all due by the resident for the security deposit, and that's independent of the repayment agreement. Everybody see how that worked? The adjustments came through and added a giant net charge between the two of them. Then our repayment agreement came in after posting it and added a negative charge, which takes their balance back down. That makes sense? Okay. And we touched on this before. What about August rent? And again, I say they owe it. We're early enough in the month. They are not due a 30-day notice of rent increase. Sorry, to be clear, they owe it regardless. The question was whether we throw that into the repayment agreement or not. And I would vote no, they owe that higher rent amount as of August 1st. Now here's where we get to changing it down the road. Any questions though on what we just saw? Okay. Changing the agreement down the road. Once you, so it's already posted. This is assuming there's been a change in the tenant circumstances, either up or down, which would increase or decrease their monthly payment that's due. You go back to monthly procedures and review repayment agreement. Then once you find it and pull it up, you'd go to the functions menu at the top of that page. You do change agreement. That'll bring up this little pop-up, and then you're filling out all these blue fields. So what month do we want this change to be effective? This would start charging them the new amount as of September 1st, 2022. We'd list their active certification. So if your income goes up or down by 200 or more per month, we should have a new cert, right? Here we're listing the 9122 IR as that new cert. The agreement amount should populate based on the amount that's left. And then this monthly payment amount is going to be the new amount from that repayment calculation sheet based on their new adjusted gross income. It's always going to be due on the 1st, and then we need to give a little reason for the change. And it doesn't have to be a novel, doesn't have to be crazy. Loss of employment as of the 9122 IR, that would lower their income. And so this is what we would put in. We click save and then post, and then that will update the monthly charges moving forward as of this date. Questions on that? Everybody ready to take a quiz? Give me just a second. If you're a member of the compliance department, I don't think you're eligible.
I was just gonna ask if I could get a prize.
I've got this box that anyone is welcome to. Andrea dropped it off on my desk one day to give away to folks. And yeah, it is yours. Anything you want. Go to slido.com. Here's our code. I have this lovely Yardi notebook. I have this screwdriver set in the shape of a house because it's practical. I have mints. I have a stress ball, and I have a coffee cup. It's all yours if you are the high scorer. Everyone in? A couple nods. Anyone not in?
I think they need a couple minutes. I saw somebody shake their head.
Is that with your phone or what? How do
Yeah, you can go on your phone, computer, either way. There's a QR code that I assume works. You can pull that up on your phone too. I forgot I can see who's in. Anybody still working on getting in? Going once, going twice. All right, first question. Repayment agreements can include zero HAP amounts owed above the contract rent. True or false? Repayment agreements can include zero HAP amounts owed above the contract rent. True or false? Got 10 of 17, 11, 12. Going once, going twice. 13. So false. False is the correct answer. So anything above contract rent is going to be part of an installment agreement, not part of the repayment agreement. Repayment agreements are only calculated in terms of how much HAP subsidy was overpaid. The following documents the consequences for tenant misreporting. House rules, fraud SOP, both or neither. A little tricky. I don't think I specifically answered this one. House rules, fraud SOP, both or neither. Going once, twice. Sold. Both is correct. I did say fraud SOP. It is in there. It also is in the house rules. It's in the house rules because if we're going to take a household to court and evict them for that policy, it's got to be something they signed off on, which is where that's why we put it in the house rules, which is the lease attachment. Which of the following are eligible repayment agreement expenses? Preparing the certs, meeting with the resident, preparing the agreement, researching income sources, or all of the above. That's such a pensive, Cecilia Pimentel.
Oh, I forgot. And I just realized I think I answered it wrong. I can't go back.
13, 14. Going once, twice, and sold. All of the above is correct. So anything regarding a repayment agreement, you can include as an expense. Sandra and Margarita dancing, I like it. And monthly repayment agreement charges are always posted on the first of the month. Whenever Christian posts written app, when the agreement is posted, it should say when the agreement is posted. And lastly, whenever I feel like it. This actually goes back to the last managers meeting. I specifically said this. It was something Jim asked for long ago. We were finally able to deliver. Ten answers in. 13. 15. 16. Go once, twice, and sold on the first of the month. That is correct. So we just switched this. So going forward, Christian, and starting with this month, starting with July, Christian is always going to post those repayment agreement charges on the first of the month. It's the first thing he does when he starts work that morning. Who's our winner? Santa. Santa is our winner. Santa, I will have all your stuff in your property box here at Central, or if you prefer, I'll just keep it at my desk. Either way, let me know. Congrats, Santas. Congrats, everybody. Thank you for playing and thanks for attending. We do have a couple of minutes. Anybody have any questions, anything they want to ask? While you're thinking of that, next month, I believe what we're going to cover is the EIV reports. We're going to talk through EIV income report in detail. Last month, we did income discrepancy reports. This time it's the income report. So looking at each of the sections, knowing what it's telling you, knowing what you need to look at, knowing what you should notate. We're also going to, within that, talk through the existing tenant search and what you're responsible for, what you need to notate there. Any repayment agreement questions, though, you guys have? I answered it all. All right. Well,
You know, it's usually,
yeah.
just a quick question. Have we, you know, I'm always having these questions, but have we had any success on, or have we gone to court regarding non-payment of repayments? And if so, or because we're going to actively start doing this now, we'll see, Nancy, I guess.
Well, that's a
Like even with the Section 8 and all of that good stuff. Have there been cases that you know of in the Section 8 department where they failed to pay? Or this is where the enforcement's getting ready to begin once we get it to, great. And I think that's
Right.
good. Yeah.
Yep. Yeah, I mean, I can just tell y'all, let me find that. I put in a chart, and for what I could find that I put all together from LIH move outs from October 6th through June 30th, we have a balance due of over $35,000. And I was, you know, using this number to say like, hey, we let all these folks move out, they owe us money, and now we're subsidizing them through the voucher program, and it's like they got off scot-free.
Yes.
And I've got everybody on board with, no, that's not acceptable.
Exactly.
So
I'm
now,
glad.
what it is now I gotta, it's now to where the rubber meets the road, where I'm like, okay, here's the draft letter. I need to make sure if I send this out and it says, if you don't make your payments, or if you miss up to 3 payments, we're gonna stop your voucher. Because it's all good and well until they actually have to do that. And I gotta make sure it's gonna hold up with Miss Henrietta, and I gotta make sure it's gonna hold up, you know, with anything with HUD. But no, like when they saw that number, you know, it's all in theory where we say we owe a lot of money. And I'm like, no, this is like 44 tenants and we are owed over $35,000. That's when you get attention, you know? And that's money you're off your bottom line.
So
You know, it's just write off. Yeah. So we're working it.
Right. If there's no other last minute questions, we'll go ahead and stop here, and we'll see you guys around. Thank you.
Thanks, Brian.
Thank you, Brian.
You bet.